Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 21st, 2025, we're dissecting the colossal market presence of Amazon, trading under the ticker AMZN. We'll not only dive into the intricate details of its recent stock movements, but also connect these trends to the latest groundbreaking news shaping its trajectory. Current market chatter is overwhelmingly positive, with top-tier firms like Morgan Stanley recently upgrading Amazon, confidently labeling it the best internet stock in the current landscape. Adding to this bullish chorus, Robert W. Baird has notably raised its price target for Amazon to a compelling $244, signaling strong confidence in its future. The primary engine for this projected growth and profitability is undeniably Amazon Web Services, or AWS, Amazon's powerhouse cloud computing division. Specifically, the advancements in cloud-hosted artificial intelligence, particularly generative AI, are being highlighted as a massive and rapidly expanding business for AWS. It's incredible to note that as of Q3 2023, AWS alone accounted for a staggering 64% of Amazon's total operating profits, underscoring its critical role. This AI integration is widely anticipated to be a significant catalyst, fueling robust revenue and profit expansion for many years ahead. However, despite these overwhelmingly positive fundamental indicators, the market narrative also suggests that some investors are keenly watching for more explicit signs of this AI lift. There's a prevailing sentiment that, relative to certain other tech giants riding the AI wave, Amazon shares have been seen as lagging in the very short term. Now, let's transition from the headlines to the hard data, observing the one-day chart for Amazon, encompassing all available candles. From March 2024 to the present, the overarching trend for Amazon stock has been undeniably upward, showcasing consistent growth over a significant period. While the journey hasn't been without its bumps, the general direction has been a testament to Amazon's enduring market strength. We can clearly identify a critical long-term support zone established in early August 2024, specifically between the $161 and $165 price levels. This area successfully halted a notable decline and initiated a strong rebound, proving its significance as a demand zone for buyers. Any future retest of this $161 to $165 region would be a crucial test of the long-term bullish structure. Following that rebound, Amazon embarked on a substantial upward trajectory, culminating in its 52-week high of $242.52 reached on February 4, 2025. This historical peak now serves as the primary overhead resistance that bulls will need to conquer to establish new all-time highs. The fact that Amazon currently trades at $226.13, which is below this February peak, directly corroborates the market's recent observation of shares lagging. This gap between the current price and the 52-week high signifies a period of consolidation or slight retracement within the broader uptrend. The prior resistance at approximately $225 to $228 could now be tested as a potential immediate support or a reaccumulation zone. The consistent volume observed during strong upward moves indicates conviction behind the rallies. Let's pinpoint a fascinating and recent period of price action on the daily chart by narrowing our focus from March 25th to May 1st, 2025. Within this span, Amazon experienced a sharp corrective wave, declining from highs around $196 to lows near $171 by early April. This significant percentage drop underscores the inherent volatility even in fundamentally strong stocks and the rapid shifts in sentiment that can occur. However, what's equally important is the immediate and robust buying response that followed. The price quickly rebounded from the $171 support, demonstrating strong demand at discounted levels and a clear willingness of market participants to step in. This V-shaped recovery signifies resilience and confirms the presence of strong psychological and technical support zones. For traders, identifying such reversal patterns on higher time frames can provide confidence for long entries when lower levels are tested. The volume during this recovery also picked up, lending credibility to the upward movement. Transitioning to the 1-hour chart, we gain a more granular perspective on the short-term dynamics of Amazon, observing the price action from late June to early July 2025. Here, we can see a pronounced and swift downward move on July 8th, where the stock sharply declined from roughly $224 down to $218.43 within just a few hours. This rapid movement, accompanied by elevated volume, serves as a potent reminder that even within bullish broader trends, significant intraday corrections can materialize swiftly, catching unprepared traders off guard. However, just as rapidly, a strong bounce occurred from this intraday low, indicating immediate and aggressive demand entering the market at that $218 to $219 level. This immediate reaction demonstrates the quick intervention of buyers, potentially institutional, who view these pullbacks as attractive entry points. This suggests that the $218 to $219 area has now emerged as a critical immediate short-term support for the stock, which is highly important for active intraday and swing traders to monitor. A decisive break below this hourly support would be a strong bearish signal in the short term, potentially opening the door for a retest of lower daily support levels. Conversely, the ability to hold this level suggests a resilient base for further short-term upward momentum and a continuation of the bounce. The volume during the initial July 8th drop was notably high, confirming strong selling pressure, but the subsequent bounce also saw a healthy increase in buying activity, indicating a battle between bulls and bears. Understanding these short-term shifts is crucial for timing entries and exits effectively. Now, let's zoom in even further to the 15-minute chart, providing the closest and most detailed look at AMZN's very recent movements from July 16th to July 18th, 2025. Over this ultra-short period, the price has primarily consolidated within a relatively tight range, fluctuating between approximately $222 on the low end and $226.13 on the high end. This tight consolidation suggests a period of indecision or accumulation/distribution among short-term market participants. At the close of our data on July 18th, Amazon is trading near the upper boundary of this immediate range, closing strongly at $226.13, which suggests a subtle positive bias heading into today. For ultra-short-term traders and scalpers, the $226 to $227 zone represents immediate overhead resistance, requiring strong and sustained buying conviction to break through definitively. On the downside, the $222 to $223 level appears to be acting as crucial immediate support, where minor dips have consistently found buyers, indicating a floor in this very narrow time frame. Observing volume on this time frame is absolutely vital. Sustained high volume during breakouts or breakdowns can validate the move, whereas low volume might indicate a false or weak signal, often leading to reversals. The tighter fluctuations observed here underscore the highly active and sensitive nature of intraday trading, where precise entry and exit points become even more critical for managing risk and maximizing profit. Currently, the balance of power seems delicately poised within this tight channel, awaiting a clear catalyst, potentially broader market sentiment or a news update, to push it out of this short-term consolidation pattern. A break above $227 or below $222 would be the first indication of a directional bias in the very immediate term. Let's bring it all together and provide a comprehensive recap of our in-depth analysis of Amazon. Overall, Amazon is undeniably strongly positioned within a robust long-term bullish trend, buoyed significantly by the impressive profitability of its AWS segment and the immense growth potential offered by its cutting-edge AI endeavors, as clearly highlighted by leading analysts. Understanding and monitoring key price levels for both long-term investors and short-term traders is paramount for informed decision-making. Our primary, Rock-solid long-term support remains firm at the $161 to $165 region, a level that has historically proven to be a major turning point. Intermediate support levels include the $170 to $175 zone, which has demonstrated resilience, and the more recently tested $200 to $205 area, a critical psychological and technical support. In the immediate term, especially for active traders, watch closely for support around $218 to $220 to hold, as a bounce from here would reinforce short-term bullish sentiment. Looking upwards, the current immediate hurdle is the $227 to $228 zone, which has acted as a minor resistance previously, potentially requiring concerted effort to overcome. Beyond that, the formidable primary resistance lies at the significant 52-week high of $242.52, a level that represents the previous top. For a strong bullish continuation, a decisive break and sustained close above this $242.52 level would be an exceptionally powerful signal for further upward movement, potentially targeting the $244 analyst price target and paving the way for new all-time highs beyond. The likelihood of this occurring is moderately high in the coming months, especially if Amazon's upcoming Q2 2025 earnings report, which typically falls in late July or early August, showcases accelerated growth in the critical AWS segment or provides clearer, more impactful updates on its generative AI monetization initiatives. Conversely, a clear bearish pivot would be signaled by a sustained break below the $218 to $220 immediate short-term support, potentially leading to a deeper retest of the $200 to $205 long-term support. The probability of such a significant downside correction is moderate. It would most likely be triggered by a broader macroeconomic downturn, unexpected competitive pressures severely impacting AWS market share or profitability, or a substantial miss on future growth forecasts. Beyond the technical chart patterns, astute traders and long-term investors alike should keep a very close watch on future Amazon earnings calls, specifically scrutinizing the performance metrics and guidance for the AWS and AI segments, as these are fundamental drivers. Any major announcements regarding new, large-scale AI partnerships, significant cloud contracts, or innovative product launches could provide the necessary catalyst for the next significant leg up in the stock price. Always remember that market dynamics are complex, therefore, it's crucial to integrate your own robust risk management strategies, carefully size your positions, and conduct thorough personal due diligence before entering any trades. Thank you for joining us on Explain the Charts. We hope this detailed analysis helps you navigate the exciting world of Amazon.